Imagine owning shares in companies so essential to our daily lives and the future of technology. They're shaping the world as we know it, and could supercharge your portfolio. We're talking about a tech giant that dominates the internet, a global leader manufacturing the brains behind modern tech, and an e-commerce powerhouse that's redefined how we live and shop. These aren't risky startups. They're market leaders with fortress balance sheets and relentless innovation. Today, I'll break down why each of these stocks is a must-watch for any serious investor. We'll cover a digital advertising and AI pioneer, a silent force powering the tech revolution, and a giant in e-commerce and cloud computing. Take notes. These three stocks could be the cornerstone of your wealth-building strategy for years to come. Hit like, share your thoughts in the comments, and subscribe for more investing insights. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Let's start with Alphabet, ticker GOOG, the company that's become synonymous with the internet. From its humble beginnings as a search engine in a Stanford dorm room, Alphabet has grown into a global powerhouse that touches nearly every aspect of our digital lives. Google Search holds over 90% of the global market, making it the undisputed gateway to information and a digital advertising juggernaut. Billions of queries are processed every day, shaping how the world accesses knowledge and connects with ideas. This dominance translates into a cash printing machine, funding Alphabet's expansion into new frontiers. The company's advertising business alone generates tens of billions in profit, fueling innovation and allowing Alphabet to invest aggressively in the technologies of tomorrow. YouTube, the world's second-largest search engine, is a cultural phenomenon and a rapidly growing revenue stream. With over 2 billion logged-in users each month, YouTube has become the go-to platform for entertainment, education, and even news, capturing audiences across generations and geographies. Android powers most smartphones globally, ensuring Google's services are front and center for billions. This open-source operating system has created an ecosystem where Google apps are the default choice, further cementing Alphabet's reach into everyday life. This creates a powerful feedback loop. More users mean more data, which leads to better services, and in turn, more value for advertisers. The result is a self-reinforcing cycle that keeps Alphabet at the top of the digital economy. But the real growth engine? Google Cloud. It's now profitable and scaling fast, competing with AWS and Azure in a multi-trillion-dollar market. As businesses shift to the cloud, Google's expertise in data, security, and AI gives it a unique edge. Alphabet's Other Bets division houses moonshots like Waymo, self-driving cars, and Verily, life sciences. These ambitious projects aim to solve some of humanity's biggest challenges. Even if just one succeeds, it could be a game-changer, opening up entirely new markets and revenue streams. Financially, Alphabet is a fortress, over $100 billion in cash, resilient through downturns, and now returning capital to shareholders via dividends and buybacks. This financial strength gives Alphabet the flexibility to weather economic storms and seize new opportunities as they arise. On the innovation front, Alphabet is a foundational force in AI. Google DeepMind and Gemini are at the cutting edge, and AI is being woven into every product. From search enhancements to productivity tools, AI is transforming how we interact with technology. While some say they're behind in generative AI, Alphabet's deep data, talent, and infrastructure make it a long-term leader. The company's vast resources and experience in machine learning position it to catch up quickly and potentially leapfrog competitors. Risks. Regulation is the biggest, with antitrust scrutiny worldwide. Competition in AI is fierce, but the market is massive and Alphabet's roots run deep. The company's ability to adapt to changing legal and competitive landscapes will be crucial for its continued success. The company's culture of engineering excellence and willingness to invest in R&D keeps it ahead of the curve. Alphabet attracts top talent from around the globe, fostering an environment where innovation thrives and breakthrough ideas become reality. In summary, Alphabet offers a rare blend of stability and explosive growth, dominant in search and ads, scaling in cloud, and loaded with high-upside bets. Its diversified business model means it's not reliant on any single revenue stream, making it more resilient than most tech giants. For long-term investors, it's a blue-chip tech stock with the growth profile of a much smaller company. Alphabet's ability to consistently deliver results makes it a favorite among institutional and retail investors alike. Alphabet's valuation remains reasonable given its prospects, and its financial strength provides a margin of safety. The company's disciplined approach to capital allocation ensures that shareholder interests remain front and center. If you want a foundational holding for the next decade, GOOG deserves a spot in your portfolio. It's a company that not only adapts to change but often drives it, shaping the future of technology. The company's ability to innovate, adapt, and lead in AI and cloud computing sets it apart. Alphabet's investments in infrastructure and talent ensure it remains at the forefront of the next wave of technological transformation. Alphabet's optionality, its ability to launch new billion-dollar businesses, means you're not just buying today's leader, but tomorrow's as well. The company's track record of turning bold ideas into reality is unmatched in the tech world. The risks are real, but so is the upside. With a history of navigating challenges and emerging stronger, Alphabet remains a compelling choice for those willing to think long-term. Alphabet's scale, resources, and relentless drive make it a generational investment opportunity. Few companies have the reach, influence, and ambition to shape the future on a global scale. As the digital world expands, Alphabet is positioned to capture value at every turn. Its infrastructure underpins much of the internet, and its products are woven into the fabric of daily life for billions. Its core business is a cash cow, and its new ventures could be the next big thing. Alphabet's willingness to take risks and invest in the unknown is what keeps it ahead of the curve. For investors seeking both safety and growth, Alphabet is hard to beat. Its combination of financial strength, innovation, and market leadership is rare in any industry. The company's track record speaks for itself. From search to smartphones, from cloud to AI, Alphabet has consistently set the pace for the tech industry. With AI, cloud, and moonshots, Alphabet's story is just getting started. The next decade could see even more transformative breakthroughs from this innovation engine. With a staggering market capitalization of $2.44 trillion, Alphabet, the parent company of Google, continues to hold its ground as one of the most valuable companies in the world. For fiscal year 2024, the company reported revenue of $350.02 billion and net income reaching a massive $100.12 billion. That puts its earnings per share at $9.48 and its price-to-earnings ratio at 21.22, reflecting solid profitability and investor confidence in the company's long-term growth potential. If you're building a future-focused portfolio, GOOG is a must-watch. It's a company that's not just keeping up with the times but actively shaping what comes next. The digital economy runs through Alphabet, and so could your next big investment win. As technology becomes even more central to our lives, Alphabet's influence will only grow. Don't overlook the power of a company that's everywhere, all the time. Alphabet's products are so deeply embedded in our routines that it's easy to forget just how essential they've become. Alphabet's dominance isn't just today's story, it's tomorrow's too. The company's relentless pursuit of innovation ensures it will remain a leader for years to come. For me, it's a cornerstone holding for the next decade. Few companies offer the same blend of stability, growth, and future potential. That's why Alphabet is my first pick. Let's move on to the next tech titan. Next up is Taiwan Semiconductor Manufacturing Company, TSM, the most important company you've probably never interacted with directly. Yet, its influence touches nearly every aspect of modern life, from the phone in your pocket to the car you drive, and the servers powering the internet. TSM is the world's leading semiconductor foundry, manufacturing chips for giants like Apple, NVIDIA, and AMD. These companies rely on TSM's cutting-edge technology to bring their most advanced products to life, making TSM the silent engine behind the world's most innovative brands. They control over 60% of the global foundry market and over 90% of the most advanced chips. No other company comes close to this level of dominance in such a critical industry. TSM's technological lead is unmatched. Building a comparable fab takes tens of billions and decades of expertise. The complexity and cost create a nearly insurmountable barrier for new entrants, cementing TSM's position at the top. Their customers are locked in. Apple and NVIDIA can't make their flagship products without TSM. The relationship is so critical that these tech giants often collaborate closely with TSM on next-generation chip designs. This creates sticky relationships and significant pricing power. TSM can command premium prices, and its customers are willing to pay for the reliability and innovation they receive. The AI revolution is a massive tailwind. Every major AI chip from NVIDIA to Google is made by TSM. As artificial intelligence becomes more central to everything from cloud computing to autonomous vehicles, TSM's role only grows. As AI, smart devices, and automotive tech explode, TSM is the ultimate picks and shovels play. Whether it's the latest smartphone, a self-driving car, or a smart home device, chances are TSM had a hand in making it possible. They benefit no matter which AI company wins. TSM is the common denominator, supplying the essential chips that power every major player's ambitions. The demand for advanced chips is set to soar for years, and TSM is the bottleneck and the beneficiary. As more industries digitize, the need for high-performance chips will only accelerate. Financially, TSM is a cash machine, strong free cash flow, high margins, and a growing dividend. Its financial discipline allows it to weather downturns and invest aggressively in future growth. Their return on invested capital is exceptional, and they consistently reinvest to stay ahead. This reinvestment fuels a cycle of innovation, keeping TSM at the forefront of chip technology. The main risk: geopolitics. TSM is based in Taiwan, and tensions with China are a real concern. Any disruption could have ripple effects across the global tech ecosystem. This geopolitical discount keeps the stock's valuation lower than peers. Investors are cautious, but that also means there's potential upside if tensions ease. But TSM's importance to the global economy acts as a silicon shield. Any disruption would impact the entire world. Governments and corporations alike have a vested interest in TSM's stability. TSM is also diversifying, building new fabs in the US, Japan, and Germany to reduce concentration risk. These moves help ensure supply chain resilience and broaden TSM's global footprint. Their technological moat is enormous, years ahead of Samsung and Intel in process technology. This lead is not just about scale, but about relentless innovation and execution. The best chip designers flock to TSM, creating a virtuous cycle of innovation and leadership. This talent magnet effect ensures TSM stays ahead of the curve. For investors, TSM offers exposure to the backbone of the digital age: AI, IoT, high-performance computing, and automotive tech. It's a rare way to invest in the infrastructure that powers our connected world. You're buying into a near monopoly on the world's most critical manufacturing process. Few companies have such a stranglehold on a technology so vital to global progress. The risk-reward is compelling. If geopolitical fears ease, the stock could re-rate higher. Even now, the company's fundamentals make it a standout in the tech sector. Even without that, relentless demand for advanced chips should drive strong earnings growth. TSM's position as the industry's gatekeeper is unlikely to change anytime soon. TSM is the toll road operator for the technology superhighway. Every digital innovation, every leap in computing, pays a toll to TSM. Its dominance, financial strength, and exposure to secular growth trends make it a strategic investment. Few companies are as well positioned for the future as TSM. While headline risk is real, the fundamentals are too strong to ignore. TSM's track record of execution and resilience speaks for itself. For long-term investors, TSM is a rare opportunity to own the infrastructure of the 21st century economy. It's not just a company, it's the backbone of the digital revolution. The company's leadership in chip manufacturing is unmatched. Its ability to consistently deliver at the highest level sets it apart from every competitor. As the world digitizes, TSM's role only grows. The company is at the heart of the next wave of technological transformation. As the largest dedicated semiconductor foundry in the world, TSMC commands a market cap of $1.25 trillion. For 2024, the company generated 2.89 trillion new Taiwan dollars in revenue, with net income hitting 1.17 trillion TWD. Its earnings per share came in at 56.30 TWD, and the stock trades at a PE ratio of 20.87. These numbers not only reinforce TSMC's critical role in the semiconductor ecosystem but also signal strong operational efficiency and demand for advanced chip manufacturing. If you want to invest in the foundation of modern technology, TSM is the pick. It's the company enabling the future, one chip at a time. The upside is significant if stability holds. With every new technological leap, TSM stands to benefit. TSM is a must-watch for any tech-focused portfolio. Its combination of scale, innovation, and strategic importance is unmatched. Let's move to our final stock, a company that's changed how we shop, work, and live, and continues to shape the digital landscape in new ways. Here's why Amazon is next on the list. Transition to Amazon. Our third pick is Amazon, AMZN, the company that started with books and now dominates e-commerce, cloud computing, and digital advertising. What began as a humble online bookstore in Jeff Bezos's garage has transformed into a global powerhouse, touching nearly every aspect of our daily lives. Today, Amazon is not just a retailer. It's a technology juggernaut, a logistics innovator, and a data-driven advertising machine. Amazon's e-commerce platform is unmatched, with a logistics network that's nearly impossible to replicate. Its fulfillment centers, delivery vans, and last-mile infrastructure allow it to deliver millions of products at lightning speed, setting the standard for convenience and reliability in online shopping. Amazon Prime locks in customer loyalty, driving higher spending and making Amazon the default starting point for online shopping. With over 200 million members worldwide, Prime's ecosystem of fast shipping, exclusive deals, and streaming content keeps customers coming back for more, year after year. But the real profit engine is Amazon Web Services, AWS, the backbone of the internet and a leader in cloud infrastructure. AWS powers everything from startups to Fortune 500 companies, providing the essential computing power, storage, and security that modern businesses rely on. AWS funds Amazon's expansion, allowing razor-thin margins in retail while driving high-margin growth in tech. This unique combination gives Amazon the flexibility to invest aggressively in new ventures, while still delivering strong financial results. The AI boom is a huge tailwind for AWS as companies spend billions on cloud infrastructure and AI chips. As artificial intelligence becomes more central to business operations, AWS is positioned to capture a massive share of this growing market, fueling even more innovation. Amazon's advertising business is now larger than YouTube's, leveraging buyer intent data for high-margin growth. By integrating ads directly into the shopping experience, Amazon delivers unmatched targeting for brands and a seamless experience for consumers. Beyond these pillars, Amazon is expanding into groceries, healthcare, entertainment, and logistics, each with massive potential. Acquisitions like Whole Foods and the launch of Amazon Care show how the company is unafraid to disrupt new industries. This relentless innovation is driven by a long-term mindset, investing in new markets and technologies for decades, not just quarters. Amazon's culture encourages experimentation, and even its failures often pave the way for future breakthroughs. Financially, Amazon is shifting from growth at all costs to profit harvesting, with expanding margins and surging free cash flow. The company's ability to generate cash is now a key driver of its rising valuation. The market is starting to recognize Amazon as a tech and advertising powerhouse, not just a retailer. This shift in perception is unlocking new opportunities for investors and for the company itself. Valuation can look high on traditional metrics, but breaking down AWS, e-commerce, and advertising separately reveals significant upside. Each segment is a leader in its own right, and together they create a diversified growth engine. The risks? Regulatory scrutiny and competition, especially from Microsoft in cloud and Walmart in retail. Antitrust concerns and global competition are real, but Amazon's adaptability and scale give it a strong defensive position. But Amazon's scale, infrastructure, and brand create a durable moat. Its vast network and trusted reputation make it incredibly difficult for rivals to catch up. Managing such a vast organization is a challenge, but Amazon's track record of innovation and talent attraction is exceptional. The company's leadership team continues to attract top minds and foster a culture of relentless improvement. In summary, Amazon offers 3 world-class businesses under one roof, each a leader in its field. This unique combination gives investors exposure to e-commerce, cloud, and digital advertising all at once. The company is now focused on profitability, unlocking new shareholder value. As Amazon matures, its ability to generate consistent profits is becoming a major draw for investors. Amazon is woven into the fabric of the modern economy, driving trends from cloud to AI to retail transformation. Its products and services touch billions of lives, shaping how we shop, work, and connect. For long-term investors, AMZN remains one of the most compelling growth stocks for the next decade. Its diversified business model and relentless innovation make it a cornerstone for any forward-looking portfolio. Amazon's flywheel of e-commerce, cloud, and advertising is unmatched. Each business reinforces the others, creating a cycle of growth and innovation that's hard to disrupt. The company's ability to innovate and expand into new markets sets it apart. Whether it's launching new services or entering new geographies, Amazon is always pushing boundaries. As profits accelerate, so does Amazon's potential to reward shareholders. The company's growth story is evolving, but its ambition remains as bold as ever. Amazon is with a market cap sitting at $2.37 trillion. The e-commerce and cloud computing titan continues to show its dominance with $637.96 billion in revenue for 2024, translating to a net income of $59.25 billion. Earnings per share reached $6.70, with a P/E ratio of 33.29. While Amazon's valuation remains higher than its peers, the company's scale, diversification, and ongoing innovation in AI, logistics, and cloud infrastructure continue to justify investor optimism. If you want exposure to the future of tech, retail, and AI, Amazon is a must-own. Its reach and influence are only set to grow as technology continues to reshape the world. The company's story is far from over. With every new initiative, Amazon continues to redefine what's possible in business and technology. For me, Amazon is a foundational holding for any growth-focused portfolio. Its combination of scale, innovation, and financial strength makes it a rare and valuable asset. That wraps up our 3 picks. Let's talk about your next move as an investor. Transition to conclusion. There you have it, Alphabet, TSM, and Amazon. 3 pillars of the modern economy, each with deep moats and massive growth runways. By understanding their core drivers, you can see why they're such compelling long-term investments. Want to level up your investing? Check out my Value Stocks Investing Master Course, link in the description. You'll learn how to spot undervalued companies, build a high-quality portfolio, and protect your wealth in any market. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon, details below. Now I want to hear from you. If you could only invest in one, Alphabet, TSM, or Amazon, for the next 10 years, which would you choose and why? Drop your answer in the comments. Don't forget to like, share, and subscribe for more investing insights. Thanks for watching, and I'll see you in the next one.